This is Patrick MontesDeOca with the live trading room for the Equity Management Academy. This segment is sponsored by the Equity Management Academy. On this report, we're going to take a look at the algorithms that were published here just a few minutes ago. And what I would suggest is that on the left side of the chart, you see updates, and click on updates, and this will take you to the report that we just published a few minutes ago. If you click on my name that shows here, posted by Patrick MontesDeOca, you're going to get all of the reports that were published previously as well, or videos that I have published, or basically content that I consistently am publishing on a weekly basis. For now, I would like to concentrate on the Gold and Silver Weekly Futures Swing Trading Instructions, October 31st, 2014. Signals are automatically generated by integrating electronic weekly statistics with proprietary algorithms. These are the components that we use that incorporate the VC price momentum indicator algorithms that we use to trade the swing trading signals for gold and silver. This information is to be applied for next week. But let's take a look at what the weekly moving average is, one of the components that we use, which is the 9-day moving average, is telling us. The December gold futures contract closed at 1174. The market closing below the 9-day moving average of 1221 is confirmation that the weekly trend momentum is slightly bearish. It's still telling us it's bearish because the market closed below the VC code of 1190. It's a bearish indication. But a close above the 9-day moving average would negate the weekly bearish short-term trend to neutral. A close of a 1221 would negate the bearish trend that was established since July. The weekly momentum indicator are the algorithms that we use that tells us basically the metrics or the pivot points for next week in order for us to swing trade in gold. With the market closing below the VC weekly price momentum indicator of 1190, it confirms that the price momentum is bearish. But a close above 1190, it would negate the bearish signal to neutral. So this is telling you, although it is bearish, that if the market was to close above 1190, it would negate this bearish signal to neutral. And the way that we basically follow these algorithms is always from a neutral position. The weekly price indicator, basically that is the price indicator for us, is telling us to cover short on corrections at the 1145 to 1115 levels and to go long on a weekly reversal stop. If we go long anywhere in this vicinity, use the 1115 as a stop level on a good till cancel order on a weekly basis. If you do go long at these levels, the market comes down to these levels next week, and you go long here, look to take profits at 1249 to 1258, 1268, excuse me. So let's review this. On the chart here, the market closing below the VC code of 1190 is telling us that it has the potential basically to come down into this buy one level of 1145, which becomes basically the highest probability buy and entry point for next week, and the B2 level of 1116. If by some chance the 1116 is triggered, this area between B1 and B2 are the highest probability trades to be made for next week. Let's take a look at the daily chart, basically, and we can see more clearly the algorithm, basically, that we're using and where the levels of support or entry points for us basically are located. And you can see here that if it does come down, obviously, to 1145, it will be making a new low for gold, but it's telling us these are the levels that offer the highest probability for us to enter into the market. And so, once again, the closing is indicating the possibility that this thing could come down to these levels of 1145, where it's recommending for you to enter a long position. And if you want to enter a second position, to enter it at 1116 and use 1116 as a stop close only. This defines for you the swing trade that if we do get executed at these levels here on the long side, that your first target should be 1190. Or you can take profits off the table if you buy 1145 or 1116, and it runs up to 1190. But this is also telling us that if the market does close above 1190, that the trend has turned up, and the next target is 1249 to 1268. These were the targets that essentially we accomplished last week, and we published this information here on the website October 24th. And basically, October 24th, it told you that if you were long, and we were long coming into from 1231, that basically you take profits of the previous week. We were long, and they were saying that if you hit 1249, that basically you should be able to take some profits. And we did get up to these levels here from the previous report that we were long, basically. It recommended on October 17 to take profits at 1752. I'm sorry, on 1252. And that basically took place on the 21st of this month. And so these algorithms, what they do is they give you the highest probability resistance levels for next week, the metrics to use to identify the trend. When it crosses this code, it becomes active, and above it's bullish, below it's bearish, and the close here below is telling us that it's slightly bearish with the potential to come down into that B1 or B2 level. Okay, so look for support in the market next week into these levels, and look for resistance at the 1249 to 1268 next week. Let's take a look at silver. And before we do that, what I want to do is take a look at gold here for a minute and see how it relates to the trend lines, basically, that we can identify. These trend lines here are trend lines going back to a June on the bottom side of it. And you can see the downtrend channel here basically has been established, and we have touched on Friday the lower end of this support of this downtrend channel, and we closed above it, which is the first indication that we found some major support at the lows of this week. And with the indicators that we have basically in place right now, as far as the codes that we have, you can clearly see where the market is indicating support. And I think all the way down here below the 1190 into this area pretty much is indicating major area of support, with a maximum target. If it comes down to the buy one, it's telling you clearly where the trigger point is. And so I think that this indicates that the price action has entered a major area of support once again. And you can see, in fact, the RSI below, that it is extremely oversold. It's at 25 or lower, and I think what we can expect here is that we should see the market hold these levels into next week, and that we should rally from here just to as a target, basically. If we break above that 1268, then we got a target of about 1300 to test, and then see how the market reacts once we get up to 1300. I believe that this is a clear level that once again the market is showing indication of major support is being tested. Let's take a look at silver now and see what the algorithm is suggesting for next week. The silver, December silver futures contract closed at 1617, and the market closing below the 9-day moving average of 1757 is confirmation that the weekly trend is bearish. But a close above 1757 would negate this weekly bearish short-term trend signal. The algorithms on the weekly momentum indicator is saying that with the market closing below the VC weekly momentum indicator of 1620, it confirms that the price momentum is bearish. But a close above the VC weekly, it would negate this bearish short-term trend that we have seen here to neutral. It's also telling you that the possibility is that because it closed below 1620, it could come down to 15, or it's even pointing to 1384 at a maximum level, where it's recommending to buy long with a weekly reversal stop and use 1384 level if these levels are triggered, and use it as a stop close only, a good till cancel order. It's also telling you that if you buy into this price levels here, that you should take profits at 1737 to 1856 levels during the week, if we see those levels during the week. So let's recap here by taking a look at the algorithms for next week. On the chart, we see the algorithms telling us that, once again, closing below the 1620 area, which is almost closing right around there, you can see here, it's slightly bearish sentiment still. But if it was to close above the 1620 any day next week, that this bearish sentiment would be negated, and the market would turn into a bullish trend. But let's look at the downside first and see what it's telling us. And here it's telling us that if you are short, that you want to cover your short positions at the 15 level to 1384 if, for some reason, the market breaks into next week. If you do buy into these levels, they become the highest probability entry points, and in my opinion, the most incredible price historically for you to be able to buy this on a buy and hold basis. These levels here, in my opinion, are historic levels for silver, in particular for silver. And so, if we are very fortunate that this price comes down to these levels here, we want to make sure that you add to your long-term position, which our subscribers basically are doing in derivatives that are related to the silver market. There are instruments out there now that are just incredibly cheap, that give you a tremendous leverage for you to put on a position with insurance, with protection in terms of time value, and also intrinsically the market is in an extremely oversold condition. So we do expect that these levels are going to hold, and I'm not sure that we're going to come down to these levels here. But if we do, this would be the highest probability and most oversold condition for you to buy and put on a long-term position. If you're trading the market on a swing trade, and if it closes, let's say if you buy here and it comes back up above 1620, use this level to unload some of the profits on the swing trade from buying the levels below, and a close above 1620 now would confirm additional bullishness in the market with an objective of first objective of 1737 and a second objective of 1856. So once again, the market is coming into next week slightly bearish, but if we get a follow through to the downside, it's telling you to buy at 15. If you're short, then this is the place where you cover your shorts and you reverse the long. And these levels for long-term purchases, as I said, in my book, are probably the best opportunity in your lifetime to be able to buy silver at these levels. On the upside, targets are 1737 to 1858 before we meet some major resistance levels. Now, one of the things that we're doing, as I mentioned to you, is using the metals markets to accumulate positions on different assets that are related to the metals markets. If you have an interest, please give me a call directly at 805 area code 418-1744, and I can be more help in describing to you precisely what these instruments are. Or you can email me at support@ema2trade.com. Once again, this is Patrick MontesDeOca with the live trading room for the Equity Management Academy. Until next week, my friends,